Hey there, new parents. Welcome back to the channel. Congratulations on your new bundle of joy. We know those sleepless nights and endless diaper changes are keeping you busy, but today, we're diving into something just as important. Your financial to-dos after welcoming your first baby. Becoming a parent changes everything, including your financial priorities. So grab a coffee or a quick nap if you can steal one, and let's talk about how to set your family up for financial success. This is going to be a deep dive, packed with practical tips to help you navigate this exciting new chapter. Let's get started. First off, we want to acknowledge how overwhelming it can feel to juggle parenthood and finances. There's so much to think about. Diapers, daycare, and those adorable tiny outfits that they outgrow in a week. But taking care of a few key financial tasks now can give you peace of mind and set a strong foundation for your growing family. We're going to walk through some critical steps like reviewing health insurance, drafting a will, considering term life insurance, funding a college savings plan, exploring disability insurance, and updating beneficiaries. Don't worry, we'll keep it conversational, practical, and easy to follow. Let's kick things off with health insurance, which is a big deal when you've got a new baby. One of your first tasks after bringing your little one home is making sure they're covered under your health insurance plan. Most plans require you to add your baby within the first 30 days of birth to ensure their medical care, like well baby visits, vaccinations, or unexpected doctor trips, is covered. Missing this deadline could mean paying out of pocket for care, which is the last thing you need with all the new expenses piling up. Contact your employer's HR department or your insurance provider to add your child to your plan. While you're at it, take a closer look at your coverage. Does it include pediatric care like regular checkups or specialist visits? Are vaccinations fully covered? What about out-of-pocket costs like copays or deductibles? If you're choosing between plans, say during open enrollment, pick one with strong pediatric benefits and reasonable costs for frequent doctor visits. Babies tend to need a lot of checkups in their first year. If you don't have employer-sponsored insurance, check out options through the marketplace or state programs. Some families may qualify for low-cost or free coverage for their kids through programs like Medicaid or CHIP. The key is to act fast and make sure everyone in your family is protected. Next, let's talk about something that might not be the most fun to think about, but is absolutely essential: drafting a will. We know, nobody likes to think about estate planning when they're cuddling a newborn. But having a will is one of the most loving things you can do for your child. A will is a legal document that spells out what happens to your assets, your money, your home, your car, after you're gone. More importantly for parents, it lets you name a guardian for your child if the unthinkable happens and you're no longer around to raise them. Without a will, the state steps in to decide who gets what, and that includes who takes care of your baby. Imagine someone you'd never choose raising your child because you didn't make your wishes clear. That's a situation we all want to avoid. So drafting a will gives you control. You can decide who would raise your child, ensuring they're cared for by someone who shares your values and parenting style. Now, creating a will doesn't have to be complicated or expensive. You can work with an attorney to draft one, which is a great option if you have a complex financial situation, like owning a business or having multiple properties. Attorneys can help you think through details like setting up a trust for your child, which can manage their inheritance until they're old enough to handle it responsibly. If your finances are simpler, there are online platforms that guide you through creating a basic will at a lower cost. Just make sure whatever method you choose complies with your state's laws. Some require witnesses or notarization. Here's a pro tip. When you're picking a guardian, have an open conversation with them first. Make sure they're willing and able to take on the responsibility. And don't forget to name a backup guardian in case your first choice isn't available. Once your will is done, store it somewhere safe, like a fireproof box, and let a trusted person know where to find it. You'll sleep better knowing this is taken care of. Now, let's move on to term life insurance. This is another one of those topics that might feel heavy, but it's a game changer for protecting your family's future. Life insurance is all about making sure your loved ones are financially secure if something happens to you. Now that you have a baby, your financial responsibilities have grown, and life insurance can provide a safety net. So what's term life insurance? It's a type of policy that covers you for a specific period, say 20 or 30 years, and pays out a death benefit to your beneficiaries if you pass away during that time. It's generally more affordable than whole life insurance, which makes it a great fit for new parents who are balancing a tight budget with new expenses like formula and onesies. How much coverage do you need? A good rule of thumb is to aim for 10 to 15 times your annual income, but you'll want to factor in your family's specific needs. Think about things like replacing your income, paying off debts like a mortgage, and covering future expenses like childcare or college. If one of you is a stay-at-home parent, don't skip insurance for them. Consider the cost of replacing their contributions, like childcare or household management. When shopping for term life insurance, compare quotes from different providers. Look at the length of the term. 20 or 30 years often makes sense to cover the years your child will depend on you. And check if the policy is convertible, meaning you can switch it to a permanent policy later if your needs change. One thing to keep in mind: you'll need to go through a health screening for most policies, so the sooner you apply while you're young and healthy, the lower your premiums will likely be. Let's shift gears to something a little more exciting: planning for your child's future education. We know college might feel like a lifetime away when you're changing diapers, but starting a 529 college savings plan early can make a huge difference. A 529 plan is a tax-advantaged savings account designed specifically for education expenses, like college tuition, books, or even certain K-12 costs in some cases. Here's why we love 529 plans. The money you contribute grows tax-free, and withdrawals are also tax-free as long as they're used for qualified education expenses. For example, if you start saving $100 a month when your baby is born, with an average annual return of 6%, you could have over $40,000 by the time they're 18. You can open a 529 plan through most financial institutions, and many states offer their own plans with tax benefits, like deductions on your state income taxes. You don't have to use your state's plan, but it's worth checking if yours offers extra perks. When you set up the account, you'll name your child as the beneficiary, and you can start contributing as little or as much as your budget allows. One thing to keep in mind: 529 plans are flexible. If your child decides not to go to college, you can change the beneficiary to another family member, or even use the funds for vocational schools or certain apprenticeship programs. Just be aware that non-qualified withdrawals come with taxes and penalties, so it's best to stick to education-related expenses. All right, let's talk about another critical task: updating the contingent beneficiaries on your financial accounts. This one's easy to overlook, but it's super important. Your financial accounts, like bank accounts, retirement plans, pensions, and investment accounts, typically let you name a primary beneficiary who gets the assets if you pass away. For many new parents, that's probably your spouse or partner. But what happens if both of you are no longer around? That's where contingent beneficiaries come in. They're the backup plan. Now that you have a child, you'll want to review and update these designations to make sure your assets go to the right place. For example, you might name your child as a contingent beneficiary on your retirement account. But here's the catch: minors can't directly inherit large sums of money. If you name your child as a beneficiary, you'll want to set up a trust or custodial account to manage those funds until they're an adult. This ties back to the will we talked about earlier. Your will can specify how a trust is set up for your child. To update beneficiaries, log into your accounts or contact your bank, employer, or plan administrator. Double-check every account, even smaller ones like an old savings account you forgot about. And don't assume your will covers everything. Beneficiary designations on accounts like retirement plans or life insurance policies typically override what's in your will, so keep them consistent. Another important step is considering disability insurance. This one often flies under the radar, but it's a lifesaver if you can't work due to illness or injury. Your income is the backbone of your family's financial stability, especially now that you've got a little one depending on you. Disability insurance helps replace a portion of your income if you're sidelined, so you can keep covering essentials like rent, groceries, and those endless diapers. There are two main types: short-term and long-term disability insurance. Check if your employer offers either as a benefit. Many do, and it's often at a lower cost than buying a private policy. If you're self-employed or your job doesn't offer it, look into private disability insurance. When choosing a policy, pay attention to the waiting period before benefits start, the percentage of income it replaces, and how long the coverage lasts. Don't skip this if you're a stay-at-home parent either. If you're out of commission, your family might need to pay for childcare or household help, which can add up fast. A disability policy can help cover those costs, keeping your family's finances on track. Hey, if you're finding this helpful, we'd love it if you'd hit that like button and subscribe to the channel. It really helps us keep bringing you content like this, and we've got plenty more tips coming your way. Plus, subscribing means you won't miss our next video on navigating parenthood with confidence. All right, let's wrap this up by tying everything together. Becoming a parent is one of the most incredible journeys you'll ever go on, but it comes with new financial responsibilities. By taking care of these to-dos, reviewing health insurance, drafting a will, getting term life insurance, starting a 529 plan, exploring disability insurance, and updating beneficiaries, you're giving your child the gift of security. You're also giving yourself peace of mind, which is priceless when you're juggling parenthood. The key is to start small and take it one step at a time. Maybe this week, you sit down to add your baby to your health insurance or research wills. Next month, you open that 529 plan, or get a quote for disability insurance. You don't have to do it all at once, but getting started now sets you up for success in the long run. And here's the thing, you don't have to do this alone. Talk to your partner, your family, or even a financial advisor to make sure you're covering all your bases. Every family's situation is different, so tailor these steps to what works for you. The goal is to build a financial plan that grows with your family and supports your dreams for your child's future. So there you have it, our guide to financial to-dos after your first baby. We hope you're feeling empowered to take on these tasks and set your family up for a bright future. Before we go, we'd love to hear from you. What's one financial step you're planning to take for your new baby? Drop it in the comments below. We're all in this parenting journey together, and sharing ideas can make a big difference. Thanks so much for watching. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Until next time, take care, and congratulations again on your new little one.